Welcome to this Econ 101 session. This is Kevin Thompson, founder and CEO of 99 Capital Group, and today we're talking about why the gold rally is persisting. I think it's valuable to have this conversation because, again, I think many of us get this wrong. So without further ado, let's get right to it. So why is gold rallying? Well, let's just first think about the obvious, geopolitical risk. But we have to understand that the dollar is still king. Everyone asks the same question. If the US dollar is the world's reserve currency, why is gold rallying so much? My thesis is simple. More countries are trying to reduce their vulnerability to US leverage, things like sanctions, tariffs, and payment system controls, which is absolutely the case. And gold is the no permission needed reserve asset. So let's do it in plain English for this Econ 101 session. So when people say the US dollar is the world's reserve currency, they mean on a practical level. Central banks hold US dollars, part of their foreign exchange reserves. Global trade, especially commodities, is priced in dollars. Global finance is built on dollars, the plumbing, banks, funding markets, dollar-denominated assets. Here's a key fact. The dollar is still dominant. The Fed's 2025 review shows the USD was about 58% disclosed in global FX reserves in 2024. That's down from earlier decades, but miles ahead of everyone else. So this isn't the death knell of the dollar. It's more like countries are hedging the dollar. So why the hedge, Kevin? Well, geopolitical risk, obviously. If your reserves are held in places or instruments that can be frozen, seized, or restricted, those reserves aren't necessarily yours. The Russia reserve freeze after the Ukraine invasion became a huge signal to many governments about that vulnerability. Reason 2, policy leverage, tariffs, and sanctions. If the U.S. tightens trade policy or sanctions, it can hit your ability to transact through dollar-based channels directly or indirectly. That increases the value of reserves that sit outside the system. That's where gold starts to be attractive. It's liquid, widely recognized, and not someone else's liability. So the single most important driver to central banks right now, or the single most important driver of the rise in gold right now, is central banks buying. This is not retail, just institutional. No. According to the World Council, central banks added over 1,000 tons of gold in 2024. That's over 1,000 tons for the third year in a row. And some surveys show that central banks cite risk management as the key reason to hold gold. So when you see gold rally, don't think, oh, this is just an inflation hedge. It's reserve diversification plus geopolitical hedging plus policy hedging. Decoupling is absolutely real. Countries aren't flipping a switch from dollars to gold overnight. The dollar remains the core reserve asset, but many central banks are saying, I still need dollars, but I want less single point of failure. Gold has become one of the cleanest ways to do that. The emerging markets, we look at that. Here's something to consider. Countries don't typically borrow their own currency and repay in US dollars. The real issue is that a lot of borrowers, governments, and companies owe debts in dollar-denominated assets, while their reserves are in the local currency. What does that mean? So when the U.S. raises rates or the dollar strengthens, it can mean higher debt servicing costs, tougher refinancing, currency mismatch stress, forced tightening at home. This is one reason dollar policy can export financial stress abroad, even the countries doing everything right. So the bottom line takeaway, why is gold rallying? Because the world is slowly repricing the reality. There are incentives to basically move away from dollars because of the sanctions, because of the tariffs, because of all the things that can control your economy. The dollar is still the number one asset, but you have to diversify. The risk of not diversifying has risen. And central banks are acting on a huge scale, over 1,000 tons in 2024. Gold is a hedge against inflation, but right now, it's also a hedge against geopolitical risk. Thank you guys for listening to this Econ 101 session. Subscribe to the 9 Innings podcast. Until next time.